Good morning, everybody. It says you're alive. And notice I'm on camera. Now, the camera is still too close. I'm like way back away from the screen. So I can barely, I can't reach my chart, so I'm gonna be turning it off. Apparently, there's software I have to download to get the Zoom right. So that's a project that may be completed on the weekend or maybe in 6 months. But I just wanted to say hi, everybody. Okay, now I'm gonna turn the camera off. I know there's probably people gonna be crestfallen that I'm turning the camera off. But I don't want to distract you with my radiance. Just joking, guys, come on. And let's get on to business. Okay, so here we are, what you're used to seeing. And as you can see, we're flat to yesterday's close. Technically, I guess we're up a point, so we'll call it flat. So yesterday, new all-time highs. Oh, I'll do that in a minute. The Fed minutes came out. Apparently, they like the Fed minutes. It was actually surprising to me. I'll kind of just go off for a second. It was surprising to me that the bond auction was kind of within acceptable limits, but kind of crappy. And, kind of on the weak side, but just barely okay. My internet's cutting in and out, they tell me. Hold on. Let's get back to here. Is my internet still cutting in and out, everybody? Maybe I'm just too far from the thing. So anyway, the Fed minutes were as expected. The 10-year auction wasn't that great, but the market still just kind of took it in stride. In the Fed minutes, as we know, Moran, the Trump appointee, said 50 basis points. There were one or two people who said we probably shouldn't cut it all. But basically, the base case is the same two cuts, one in October. Oh, Powell speaking at 8:30, correct. And you could use the mic. So EMA Cloud Sniper, I'm just going to put you on for a second in front of the whole world. If you're on here, you can use the mic and you should be able to speak. Okay. If you're down there, you can't speak. I have to add you to the stage. And I could add 10 people to the stage. So anyway, on with the show. So that's what happened yesterday. But in the church of what's happening now, where we worship, the icy whale. Let me talk about the icy whale. Many of you probably know about him. Some of you don't. So the icy whale is somebody that technically has a small hedge fund, 50 million-ish. That's relatively new. He has a large subscription service, pretty high-end subscribers, charges $3,000 to $5,000 a year for the service. And a lot of the people that subscribe to him tend to go big, 20 contracts, 100 contracts, 200 contracts. And so pretty soon he has 3,000, 5,000, 10,000 contracts, 20,000 contracts like he has today that basically dictate the narrative, even though he's basically not JP Morgan or anything. He's just a guy. But anyway, be that as it may. Oh, and shameless plug for me. Some of you may know him by the name Captain Condor, which people gave him recently the last 6 months. I've been tracking him for more than 3 years. I've always called him the icy whale. So just thought I'd point that out. And so I still call him the icy whale, even though in articles he's called Captain Condor. Okay, so yesterday his calls were at I think 40, and he got skewered. So he more than doubled his size today. He's got about 20,000, 18,000 contracts. Baron Powell opening remarks, deal with community banks, not anything else. Okay, so he's just sticking to the script here. So when he gets when his calls get violated or his puts, he does martingale strategy, doubles up a little bit, not exactly doubles. There's a progression, there's a mathematical progression. Different people use different progressions. It's easy to track his progression. I have it, but I don't use it. I'm just saying I have it. And so it's keep doubling until you go broke or win. And he hasn't gone broke yet. He's come close 2 or 3 times. Some of his subscribers haven't had the capital to keep doubling and have gone broke, but a lot haven't. So anyway, just letting you know. So his short puts are at 20. Let me move this over. I did this last night. His short puts are at 20. And his short calls are at 75. And so that defines the edges. Now, he sold his calls within the expected move, as he did yesterday. I've explained to my subscribers the strategy and why he does that, but we'll stay away from that for now. Let's figure out how we're going to make money today. And so that's where we are. We don't have a lot of articulation of levels very much in between like we normally do. I probably should have drawn a line here at 65. So mentally draw one there at 65, or I'll draw lines. But it's not just kind of a pivot level. It's also a level that a gamma level, so to speak. Exactly. Close enough. Okay. So really, you should have a line there too, and I'll show you why. So let's switch gears to options there. Oh, let me just put mentor Q on the board here. Discount links for mentor Q and options depth, which I've been remiss in terms of putting them in to the chat and into my tweets and stuff. And so these just give you kind of broad zones. Actually, it just kind of makes it hard to see, so I'm gonna get rid of that. I prefer to see my lines than somebody else's because I drew them. All right, now I'm going to switch gears to what's going on. Okay, so quick review of gamma 1.0. To the right is market makers, long, customer, short. Here's the IC Whales calls, call credit spread. Roughly 18,000 contracts and roughly 18,000 contracts on the bottom. So that pretty much frames the edges. Gamma review 101 without all the fancy Greek nuances. As we go up from below, market makers are too long, they're delta hedging, and so they sell. But as we move away, then they're too short and they have to buy. So if you're close, that becomes sticky. Same dynamics below. As we move down, they have to buy, they're too short. But then as we move away, they're too long and they have to sell, and that becomes sticky. So if you're near either one, it becomes sticky. In the middle, you're kind of like floating, and generally, obviously the whole thing is hedged out, um, balanced out the exposure. And so when the exposure gets lopsided, so you just kind of think of it as kind of the bouncing ball between there. And in between, we really don't have much to hang our hats on in terms of what's going to happen. Now, this is broadly hedged out. And so unless we get close to these, what's going on locally, when I say locally near spot, is going to be what's going to frame the movement of the day. And so what do I mean by that? If people come in and start buying 67, 75 calls, or 67, 60 calls, or 67, 35 puts, whatever it is, that's gonna be what needs to be hedged. We're hedged here. And that's going to dictate the movement intraday, plus real money buying and selling, etc. There are real, remember, gamma is conditional, depends on spot moving, and spot SPX is going to move based on buyers and sellers. Otherwise, we just stay frozen forever. Now let me switch gears to a different view. This view just kind of makes it real easy to see, because the bars, sometimes you can't see the sizes. So we're over here, 2000 market maker long sticky. So we're sticky right here on 55. So if we're over 55 and we head towards 75, this big positive gamma area pushes us back down, but then sucks us back up, like we had yesterday between 40 and whatever the number was, 60. It just kind of stayed right there. So if over 55, we could just kind of get stuck in here. If below 50, 55, there's not a lot here to stop us from going down from a gamma point of view. You got a little bit here. You got 67.35. We got some long puts over here. And if customer, that's kind of the bottom of the expected move. If you look at your option chain, the expected move. And so that's kind of where, if we get some weakness and VIX pops a little bit, or however you monitor IV, maybe you look at the VIX 9-day, maybe you look at skew somehow. Looking at VIX is a pretty simple proxy. If you see VIX spike and we're down here and some put buyers come in, we could kind of head toward the bottom of the expected move, which was around 22-ish. When I looked earlier at around 6 a.m. was about 25-ish when yesterday at the close. So from 55, 25 puts us at 30, so it puts us in this range. But as we get down here, the 25 and the 20, 67, 25, and 20 will start pushing us back up. If VIX is over 17, a little bit more, then it could get a little dicey. On Tuesday, we saw a similarly large level at 57.05 break and then reclaim back up. And so that is possible, not likely, but, on your outlier mental asterisk, put that there. My base case is we've had 3 days where we've exceeded the expected move. We're due for a consolidation, close plus or minus 10 or 15 from where we are now. So close maybe 60, 65-ish, maybe 45, 40-ish, somewhere in here would be my base case. The reason we have two down here, we have 10 and 15. Some people in the IC Wales crew do 10 wide, some do 5 wide. That's what that is. And here, and then we also know that we have systematic sellers come in every day in the morning near the open that sell 5 and 10 white iron condors. And we get those updates in my room. We use the option depth data that comes in with the flow every 10 minutes. And then one of the people in the room is generous enough to take it and to put it together in a format that's easy to use. Otherwise, you just see a lot of numbers. You can't really tell what's going on. At least I can. You just see flow stuff here. So I appreciate that. Shout out to the Hoot Owl for doing that. And that's basically all I've got to say for now. I'm sure I'm going to, let's take a quick look at volatility dashboard. We looked at it last night in the subscriber only chat. There really wasn't much going on there, but let's just kind of take a peek for fun. Let's just look at the simple dashboard, not the fancy one. If I could find it. Here it is. No. Okay, good. I can't find it. Is it over here? Nope, I can't find it. Hold on. It's 2-panel. Here we go. 6-panel. Okay, here we go. And so VIX, yesterday we had VIX try to pop a little bit in the morning, and then it just kind of faded all day. So that kind of gave us a headwind, a tailwind rather. And the day that we broke down on Tuesday, I can make this a 15-minute time frame. The day that we broke down on Tuesday, we spiked all the way up almost to 17.5. We've been stalling at 17.5. There's some gamma reasons why, and options depth is coming out with a version that's going to have VIX gamma levels and all that too. I've got the beta, but I'm not allowed to preview it for you guys, so watch his. I think he sent out an email or a tweet teasing it, or it's going to maybe unveil it or do something. So keep your eye open for that. And so heading towards 17 could get nasty. Customers are long calls up there. Shouldn't be a shock to anybody. And so as we head toward customer long call, market maker short, they hedge buying VIX futures / VX, which puts a strain on the complex. VVIX popped, on the other day, but if we just look at yesterday, VVIX kind of popped toward 98. It kind of is back in the 95 level, but it's way off that low 90s level. So the VIX complex is kind of showing a little stress, but to me, it's healthy stress. The VVIX-VIX ratio is below 6. So that's also kind of healthy stress, no big warning signs. Theo trade on Wednesday, on Tuesday night after the sell-off, had like a hyperbolic dispersion trade at all time, whatever, kind of clickbaity kind of headline. And yes, the dispersion is at the 85th percentile, which is basically institutions selling index vol and buying individual volatility. And yes, the individual constituent volatility is, I thought that's if you guys do the same calculation you do at VIX on the volatility of all the 500 members. No, actually it's not all of them. I think it's the 50 biggest one of the S&P 500. you get a vol of 40 versus a vol of 16. And if you look at the difference between this and the dispersion index, you get a number. And I have that. I tweeted that out the other day, I think. And basically, we're at a stressed-ish level that we've been at for a while. So it's bend but don't break, and it hasn't broken. Doesn't mean it can't, but so far, every time the bears have gotten emboldened, they get slapped down. So that's what I'm going to say about the volatility space. I'll probably do a bigger write-up on this whole mess on the weekend. Lately, it's been my weekend project to write this stuff up, hopefully to educate people and also to educate myself, truthfully. The more deep dive I do, the better I like it. Okay, so I'm going to get back to a chart of the S&P 500. I'm going to reluctantly turn the mic over to somebody else. No, just kidding. Go ahead, Bad Hombre, you're on. I'm going to pull up E-mini. He does our E-mini scalping.
Can you guys hear me?
Yep, go ahead.
All right, good morning, everybody. So today is pretty straightforward. I'm vigilant to see if we break below 797. And if we reclaim that, then I'm going to be targeting 6,800, 6,815. And if we can't hold above 6,815, then I honestly don't have a target for us right off the gate, but I will be long and I will be holding the runners. Not really considering shorts unless we can break below 67.85. So if we break 67.97, 67.98ish, we come down to 67.85, I'll be looking for a touch of that potential bounce back to the upside between that range, 85 to 97. Be trading that range, but if we break below 85, then I'll be looking for shorts. Not excited to take shorts today, though.
So you said 67.85, right around here?
Yep. That's kind of my last battleground for bulls today. Maybe 60, but I think if we're heading down there, we'll see some selling.
Okay. And note to my subscriber, I screwed up on I think ChatGPT screwed up, but I take responsibility. This ES string isn't working because it should have, what should it have there? A 1 or something? I think it should have a 1. Let's see if that'll make it work. No.
You can also remove that altogether.
So I'll correct it and I'll get it out to people.
String without the ES part, it'll work.
A 1 or is it an exclamation point maybe? Oh, come on, help from the peanut gallery. How's that supposed to be formatted?
If you just put the string itself without the beginning of that, because it's on ES, it'll work with ES without it being told to.
I got the formatting wrong. Maybe it's an exclamation point.
Yeah.
No, I'm gonna have to fix that later. Anyway, so I'll fix the formatting. ES1 exclamation point. I think that's how it's supposed to look. You guys get to watch me do this. I know this is thrilling viewing. ES1 exclamation point. Right. Okay, that should do it. Yeah. See that? I'm going to apply for a job as a software engineer now that I figure that out. Okay, so here we go. So now your levels, the 85, so make more sense in context of what's going on with the gamma. And correct me if I'm wrong, like many people in the ES world, the kind of primary way you guys do it is based on whatever your support resistance level, and some people use market profile, that sort of thing. And then gamma levels are used sort of to help refine exits and entries, and to kind of refine how you might manage a trade or enter a trade. Can you talk a little bit about that?
Yeah, I personally use them to know when to not enter a trade. Everyone's got a system. Everyone trades their own thing, and sometimes there are entries your systems give you that don't actually react or are actually losing trades. And I think that's where the gamma side really comes into play. You don't want to be buying near Gex wall, or there are certain things that you don't want to be fighting against, and I think the gamma levels really paint that picture well.
Good way to put it. There's certain things you don't want to be fighting against.
Yeah.
And you don't want to be fighting against all these customers, short calls, long, short calls, market maker, long gamma here. You don't want to be fighting against a big market maker short position. Exactly. And that just gives you an edge that the rest of the E-mini regular traders don't have.
And I got another quick tidbit for those that trade NQ. If we can hold 340 at open above it, I'm expecting a breakout to the upside if we can hold that 340.
Okay, so G-Man says follow the money, and reminds me of the Super Bowl in 2012 when the Seahawks were at the goal line, and it's kind of like at the 2-minute warning, Marshawn Lynch, they've been ramming the ball down the New England Patriots' throat all game. And then they decided to get too cute and throw the ball in the end zone, and there was an interception, and New England won. And I'm saying that to say this: you don't have to get too cute. Follow the money, like G-Man says. And so this is my small account. It's usually not up $500. Usually up 100 or two, whatever, down 100 or two. This is like a demo account, I guess, used to treat people, as a teaching account. But I want to point out why it's up, a big chunk of it. You see this fly, 67.60 long, short 267.90s, long 180.200. Well, on Tuesday, during the sell-off debacle, a large, we're going to assume institutional order came in making that trade. And courtesy of my boy, Hoot Owl, he flagged it. I said, you know what, for science, I'm going to put that trade in. And I put that trade in, and it seems to be doing pretty good. I'm just kind of curious. Here we are, 50% profit. Cost me about, 485, $500. It's 50% profitable. Mostly on the clever decay, but that's all right. I don't care why it's profitable. When you do a butterfly, when I do a butterfly, I'm not necessarily looking for the long strike to be in the money, although that's nice and it looks like it will. If you structure it right, this is what happens. And I relied on the fact that whoever bought a few thousand contracts kind of knew how to structure it right. Maybe I'm naive. And here's my version of the IC whale trade. I saw him, I knew he was going to come in yesterday, so I did my version of it, which is going to be a product I was thinking of rolling out. It probably will eventually. My version of it, where I went outside the expected move, these were about a 10, 12 delta. I sold them yesterday. And similar down here. Well, this is decayed to nothing. This is basically full profit. Let's look at what he's got. Actually, he's a little profitable too. He sold it for around $2. So he could just take the money and run and, close it out now. He won't. I think he's going to win today. I just put it in at this price just to kind of be able to track it. $4.95, it's not going to get filled 5 cents away from the price. But just to be able to track the way it moves so I can report it to people. So what would I do now if I had to put a trade on now? Well, I like knowing that the IC whale is kind of protecting me from above and below. So could I get below 6,700 round number and get something decent? 95, they have 15 wide a quarter, nothing, so nothing to do there. Maybe a 10.95, that's not bad. I'll put in one for fun. Could put it in at 60 cents or maybe move down to 05 or somewhere in there. Right, let price come to you. And on top, I don't know, 90. That's another 50. That's another, what is it? 90. That's another 50 cents. That's not bad for the 15 widers. 5 wide crew. 5 wide crew probably could go. I could even go a little further, maybe. Could probably go the same 90 and get 25 cents on the top. And educational purposes only. Something like that, 05, 10, somewhere in there. I know I have some people that like to trade 5 wide or 10 wide. So for educational purposes, how did I pick those levels and why? Because I want to teach you how to fish, not fish for you. I'm picking levels to sell below here. Now, if 67.20 breaks, 67.10 is in target. So ideally, being below here, would in the best of all possible worlds. But the assumption is this isn't going to break. The assumption is that if it breaks on top, you might have to get out fast. So, I might not be so eager to sell the calls right now. I think that we get the same thing we got yesterday. If this breaks at 67.75, we kind of grind up a little bit, and then this big 25,000 up here pushes us back down, and we would kind of end up in this 80-ish, 85 area. if that happens, I don't expect it to happen. I expect today to be within the expected move. Private chat. Thank you. Yeah, ES, one exclamation point. I figured it out. Bullish market, yeah. I don't think 6,800 breaks today. I mean, it could, but I do think it breaks maybe this week. Because if this is customers long, 6,800, customers long, 6,800 and 6,790. All across the chain, we have this negative gamma pulling us toward it. Now, if this 75 breaks, if we break 75.80, we could get a run to 6,800. I'm not discounting that. I don't think it'll happen, but we could. All it takes is some people to start coming in buying calls up here and unbalancing this where there's more market makers short delta than long delta over here. And this could break. If somebody can weaponize the gamma, figure out the formula for that, that could happen. Again, base cases, I don't expect it, but I certainly wouldn't say it doesn't, it won't. I'm gonna have to tell ChatGPT again. I told it like almost every day since I started doing this ES string, the formatting, I hope that it will remember so I don't have to remember. And each time it does it, it gets it wrong. And what I do is I just feed in my daily plan and I say, turn this into a TV string. You could do it too. Or whatever levels you want, however you want to do it. And then I have an indicator that converts it into whatever. But you want the package, you get the package. Oh, and so typically on my Subsatck or whatever, I'll put out an abbreviated version and a full roadmap game plan with all the if-thens. It's for paid subscribers, but I have 2,000 people subscribing on Subsatck. Most of them free, but that's okay. And so in honor of the 2,000, this is a 2,000 a 2,000K freebie edition on Subsatck. Thank you for your trust and your support. And like I said there, anybody has any feedback, comments, suggestions, not that I'll be able to implement them, but anything like that, I'm always trying to improve what I'm doing for myself and for you guys, understand I'm technologically fairly limited. So, I mean, somebody came up with a great idea. All I have to do is hook up an API to this and create a Python that and download this to a spreadsheet, which I don't even know how to open a spreadsheet. And I'll tell you how to open it, click it. After that, I know what to do with it. So what just to some of you guys is to me is like rocket science. Like I've often said, not jokingly, I did my books on, remember those adding machines that had a spool, like a paper spool, so you could see the numbers? That was what I did my books on till I retired. And I kept my other stuff on 6-column accounting paper where I wrote the stuff in the columns and whatever, and then added it up on the adding machine and looked at the little spool. So that's where I am technologically. My reports were dictated and sent off to somebody to type. So that's where we are with that. So little human interest story. And so that's where we are. Any closing comments? Bad Hombre?
Just to touch on that, if anyone who does need any technical help in the server or anything like that, always feel free to DM me and I'll take care of it.
Yeah, good point. Because if you try the technical help from me, you might not get a lot of help. I do what I can.
Yeah. And then things can get lost playing telephone. So if you just go straight to me, we can definitely just fix you right up.
All right,
Looking
everybody.
forward to a clean day.
Definitely fix that. Looking forward to a clean day. Yeah, me too. Okay, guys. Take care, and my guys see you in the room where I live stream the chart and do running commentary, kind of like this. And Bad Hombre does it in the scalping room when he scalps at those opportune moments. And that's it. Now I'm going to go listen to vol signals. Take care.
Have a good day, guys.